What's up, guys? Welcome back to the channel. My name is Forrest. I invest in stuff I think that you should too. Today we're talking about travel. A few of the people in my group brought up, Carnival Cruise Lines. Personally, I'm interested in Trivago. And I think that now is just a really good time to be thinking about getting back into these companies that have really been hampered by the pandemic. If you're new here, a lot of my trades are 3 to 6 month trades, swing trades, right? We made around 100 grand on check cap. That was like a 4-month hold. Exit out of the position in February. Really just a few weeks ago, I can't remember exactly. I've been super busy. Quick interjection, because I forgot to do this earlier. Before I forget, there is free money down in the description of this video, guys. Hit the links down there. You can get some free stocks when you sign up for Webull, when you sign up for Robinhood. There's no reason not to get this free money, so go ahead and hit those links. And if you want to join a community of people who are like-minded, who are interested in thinking about their financial future, thinking about investing, trading, and really just different ways that we can make money, whether it's in the stock market, real estate, join my Patreon, join my Discord. This is a community that I'm very focused on building for people. It's not necessarily just a hype community, right? It's not focused on just getting excited about things, but really having deep and meaningful conversations about ways that we can change our financial future and our lives. So check those links out down in the description of this video, and let's get back into it. Moving down here to Miami is beautiful, by the way. This is just my pool here on the roof. But let's talk about Trivago. So Trivago is basically a booking company. If we take a look at their chart going into the pandemic March 2020, we can actually see that there was a huge dive right at the beginning of the pandemic, as to be expected with most travel companies, whether it's Trivago, airlines, hotel booking companies. All of these got crazily beat up right at the beginning of the pandemic, right? So now, being, you know, a little over a year later, we're just coming out of March of 2021. It's the very beginning of April. Being somebody who buys options, being somebody who's always looking for these mid to long-term holds, these things that can have exponential growth, this is a great company to evaluate. So there's really two things I want to talk about in this video. One is, let's just look at Trivago's financials going back a year. You know, how were they doing before this whole global situation? Obviously, I think that regardless, every company in this sector is going to see a huge bump when people start traveling. People are beginning to travel now. The vaccinations are becoming more and more available, at least here in the US. Speaking with my friends around the globe, we know that those are becoming more available as well. So let's take a look at their financials, and then let's just talk about the entire sector. So one is kind of analyzing the company, and then two is what is likely to happen with the sector. As we've seen, and really when you're trading, when you're swing trading, not necessarily long-term investing, you can look at investing in sectors in general. There's going to be a general increase in positive sentiment when things pop off, when they take off, right? And so even if a company isn't personally or individually doing so well, you can still ride that wave, that sector wave, as, you know, people basically YOLO or FOMO into individual things. So let's dive into the fundamentals. If you're wondering why I'm outside, I want to do this outside because it's beautiful out here, and why not? Why not? So if we actually go back all the way to December 2019, we can see top line revenue of 174 million going into March 2020. All right, this is quarter over quarter, 154 million. And that is right at the beginning of the pandemic. After that, going into basically H2, the beginning of H2, June 2020, down to 18.1 million. So there's a very obvious impact to their business at this point in time. As you can imagine, there wasn't much that they could do, right? So actually, the fact that they maintained some type of revenue, not even actually sure what they did there, is pretty impressive. Going into September of 2020, there was an increase back up to $71.1 million. Again, if we think back into last year, which seems like it was forever ago, it actually wasn't that long ago. It is pretty impressive to, after seeing that tank, right? So 71.1 million is basically half of what they did in March 2020. Still got pretty beat up, but that June 2020 number is rough. $18.1 million for a company that was essentially doing almost 10x that is really, really rough on the business. I'm sure that they're having a tough time there. Yeah, so we can actually see how bad of a time they're having. If you go down to their net income, again, looking at starting in December 2019, net income to the company was $3.5 million, then negative $236.1 million in March, going into June, $22.7 million, negative $2.7 million, and now we're down up to negative $10.6 million. So they're definitely struggling. Again, all of these negative years have been, or these negative quarters, really all these negative quarters have been during the pandemic. So just looking at their financials, you would say that the company is in a really rough spot, but this is the exact perfect time. These are the things that we like to look for, really as investors, even if you're doing long-term investing, but certainly as traders, right? So me personally, I'm a swing trader, trade options almost exclusively outside of my long portfolio. And this is a great position to buy calls on. You could even buy leaps on this if you want to, right? You could look out a year and just assume that, you know, once everybody has vaccines available, you might buy a bunch of options, contracts. Another thing that you could do, it's a little less risky, is you could buy, say you go in and you buy 10,000 shares, you could buy covered puts, right? I don't think that we're gonna see the price crash. The premiums aren't too crazy on this right now. I think the premiums are actually pretty trash because there isn't that much volatility. These things are connected. But there's a number of ways that you could mix or mitigate your risk while still playing the upside on this. The fundamentals are a little beat up. That's basically what we want. That's actually the reason that we're looking at this in general. The whole sector is actually beat up though. Again, which is exactly the type of thing that we're looking for. If you look at Trivago, if you look at, you know, Carnival Cruise Lines, all the different cruise line companies, if you look at airline companies, a lot of people have been playing airlines. All of these have basically just gotten really beat up, and they're not doing so well right now. But that is exactly when you want to get in. You don't want to get in 9 months from now when everything is recovering. They've appreciated 30%. They have that intrinsic rise due to the economy basically going up. You want to get in before all of that, right? So now is the time. You can't look at the red really as a negative indicator. You need to be looking at red. You need to be looking at you know, companies that are beat up, but that are in a something that you know is tied to the overall health of the global economy, and look at these as buying opportunities, guys. This is the way that you make money. Again, you need to look at the red, the dips, the negative financials as buying opportunities. Do not FOMOing into things. For example, getting in at Tesla at $900. For example, getting in at even GameStop at $400, right? These are FOMO plays. You want to get in early. You want to get in. You want to be one of the people leading the charge in this case. It's going to be a really up close video too, I just realized, because I've been filming from like right. Oh well. So that's the sector. What was the other thing I was going to talk about? How do you play it? So I was talking a little bit about this earlier. You know, personally, I think there's going to be a huge swing here. So, and volatility is low right now, which means that as volatility increases, right, as the sector changes, we're going to see a huge spike in intrinsic value premiums in general, which is good if you get in early. So you could, depending on the size of your free cash flow, buy a bunch of shares, right? You could sell, you know, cash secured puts, you know, covered calls, do whatever you want to do in that regard. I think options in general are a great play here on something that I think is going to see increased volatility in the near future. What I'm going to do, or very likely going to do, is just buy calls, mid to long-term calls. There aren't too many options available now, so I think the latest option available, I can't remember off the top of my head, is expire in June. Might buy 100 or so of those and just sit on those for a while. Let the volatility increase, premiums increase, and then sell those at a nice little pop there. So that's what I'm gonna do. Don't hold these for too long. I think that we're gonna see an initial rise as the sector takes off, but then, you know, one of the things that happens after every, you know, meteoric rise as people FOMO in and all that is there's always a pullback afterwards, right? So people will start looking at the financials again after the initial uptick, and then there's going to be a strong pullback when people, you know, basically start putting out hit pieces and the FUD basically saying, here's why this isn't as good of an investment as we said it was 2 months ago. So just be aware of those, you know, the whole buy the rumor, sell the news jazz, yada yada. But generally, when you're doing options, you should, you know, hit your goal and then get out, right? Set your limits, get out, make the money, and then look for your next trade. Or you can get in and out of positions. That's totally okay. But these aren't long-term investments, guys, so you need to have some type of plan, basically game plan. Stick to your plan and don't worry about missing, you know, 2 or 3% at the top, because you're gonna miss the top either way, and it's better to miss it on the way up than on the way down, more or less, because yeah, that's just my 2 cents on that. But really, that's it for this video, I think. Again, if you're new here, go ahead and hit the subscribe button, hit the like button. I appreciate it. Trying to get to 10,000 subscribers, and you could be the next one. But until next time, Force Night out.